just a second. Our earnings are starting to come out here. El Pollo Loco with its quarterly results. Our Kate Rogers has those numbers. Hi, Kate.
Hey, Kelly, that's right. And it's a beat on the top and the bottom for the fast food chain. So EPS coming in at 18 cents a share adjusted. Beating estimates of 17 cents. Also, revenues coming in at 90 million versus estimates of 88 million. Comp store sales estimates were for about 5.5%, coming in at 5.1%. Slight miss there. And also 2015 EPS guidance coming in slightly below estimates at 67 to 71 cents a share versus estimates of 70 cents. And the stock continuing to fall in the after hours here, down by nearly 10% for El Pollo Loco. Back over to you.
Kate, thank you so much. By the way, everybody, be sure to tune in to Closing Bell tomorrow because El Pollo Loco CEO Steve Sather will join me in a CNBC exclusive to discuss these results. You won't want to miss that. And Eric, wow, that tells you how sensitive this market is to some of these growth names. I mean, they missed their guidance a little bit, as Kate said, and look at the share reaction.
Yeah, the share reaction is what it is, but when we think about, I mean, this was the story from a few months ago when gas prices were lower and we saw some of the research that we talked about on the show. They were putting it in fast food. People were saving money on gas. They were buying fast food. And now you're starting to see, well, maybe that's running out a little bit. What does that mean for the rest of the year if people have gotten used to that and now the spending isn't going to change more to El Pollo Loco's favor? Great point.
And Mike, we know as well from Kohl's, and I'll keep repeating it just because I find it interesting, they saw negative comps. They indicated in some of the oil regions, their Texas stores and elsewhere, perhaps it's more of a sting that we're getting from the drop in oil prices than a real benefit to some of these consumer names.
I think I would be more concerned with the pure retail names, with people selling clothes and stuff that you walk out with in a bag, because the fast food story remains on a macro basis okay. What's that?
Can't you carry a burrito?
Don't you eat it right there?
Yeah.
No, honestly, I think that the fast food story is fine. This problem with this one is it came out as an overpriced IPO. It ran real fast. It's come back and rebuilt a base, but I don't really think this was one of your value names in the space.
But not Shake Shack. I mean, that was a similar story.
And they doubled their comps.
Right.
The comp estimate
almost
was
12%,
5, and they came in at 12.
Yeah.
So that thing's being squeezed to the stratosphere because you can't even short it.
And it's interesting to look at the difference. So Shake Shack, the best performing IPO of 2015, up more than 200%. El Pollo Loco, this is only their fourth quarter as a publicly traded company. They're not able to put up those numbers, I guess. Dani, where do you fall now when it comes to the consumer space? What's an investor to do?
You can't trust the consumer right now. The consumer is actually not coming up to the plate.
Anybody?
Yeah, exactly. You can't trust the markets. You can't trust the consumer. Are you going to say don't trust the government next? Because then you've got them all covered.
Surprise, right? No, but the consumer is actually not stepping up like we thought that they would, or at least thought she would. I think that's what we're really seeing.
On that very note, Nordstrom earnings are now out. Let's see if they can do something about the consumer. Courtney Reagan has those numbers for us. Hi, Courtney.
Hi, Kelly. This sort of follows the pattern of the other retailers we've seen. Nordstrom turning in a mixed result. So let's start with the earnings per share. Turning in earnings per share of 66 cents. That does fall short of analyst consensus of 71 cents. However, there is a beat on revenues. Nordstrom reporting $3.22 billion compared to $3.16 billion consensus. Same-store sales up a pretty strong 4.4%. That compares with street estimates of an increase of 3.3%. Full-year earnings guidance, however, a little bit light. That range a little bit lighter than analyst consensus. And I do want to point out that women's and men's apparel were the top-performing categories. Interesting because we, of course, have seen strength in accessories and shoes, but it looks like men's and women's apparel top-performing categories for Nordstrom, at least for this quarter. Kelly, back to you.
Courtney, thank you. Guys, I find this one fascinating. We have the rare EPS miss, revenue beat. That is the complete opposite of most of the trends we've seen throughout this earnings season and the last several, Dani.
That's right. And they're looking actually for sales growth of 7 to 9% going forward. So they're actually betting on the consumer doing a little bit better.
Dr. J, are you surprised by this one?
Well, knock on wood, and right here, too. There was a pretty good option tell in both of these stocks. El Pollo Loco, they were buying the June 29 puts. In JW Nordstrom, they were selling the 75 puts, which were in the money, basically, at the end of the day, and they were buying 75s and 77.50 calls. So, in other words, in Nordstrom, after a dismal first half of the year, or first year-to-date numbers down about 6% on the stock, they were looking for upside breakout. It looks like they're getting it back a little bit right here.
Good point. Mike, what do you make of this one?
You know, I really have to know exactly where they're missing in the income statement to see exactly whether this is something you want to really extrapolate. But 4.4 comps, mature, higher-end department store, it seems like you can't really sneeze at, and 79% top line for the year seems okay to me.
And the market seems to agree, by the way. Much better after-hours reaction. Some of the other big names, of course, are down. So where does this leave us now? I mean, we were just talking about where do we look for leadership. It sounds like it's not the consumer. Probably shouldn't rely on the energy space. Do we look to the financials?
Well, I was just going to say, I mean, that's the banks' maybe breakout has people very excited. I don't know how dependent that is on the yield curve continuing to steepen, but those big banks definitely have shown that they have really not been a leadership group during most of this run.
Dr. J, your thoughts on this one before we have to go?
Absolutely love it. Loved the move by J.P. Morgan today, Kel, that hit $66 a share, highest price since, I think, 2000. And Goldman Sachs, Morgan Stanley, I think you'd throw Bank America in there as well. If you have this higher interest rates going up, that's going to be really good for the brokers.
All right, we'll leave it right there. Thank you, everybody, and be sure to stick around to catch more of John coming up with the Fast Money crew at 5 here. The S&P hitting a record close, but it's a tech trifecta that really rocked the street. They'll have the details behind 3 names with the biggest moves.